All right, well, good afternoon. We're recording this. When are we recording this?
Unfortunately, it's not till Sunday,
Sunday.
about
Got some
4:20.
technical difficulties. Um,
We're busy people. We got real life.
yeah,
It happens.
welcome back to Rebel Trading Group podcast. This is our fourth episode. Today's date is March 25th, 2018 on a Sunday. Beautiful Sunday afternoon. It's nice and sunny outside.
A little cloudy here.
Yeah. My name is Nathan Oliphant, of course, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free Jason Besson.
Yeah, so how are we doing today, Jason?
I'm doing good. I'm doing good. Busy weekend. We tried to record this on Friday, but of course, real life gets in the way.
It does.
Go ahead and start with the numbers. We had a rough week. Dow finishing down 1,360 points for the week. That's a 5.5% drop. S&P mimicking the 5.5% drop, losing 153 points, and the Nasdaq in the same ballpark, losing 424 points. An ugly, ugly week. And at one point in the day, we were up, like right in the morning. I thought maybe this was, the end was here. And there was one point, everything just started. Okay, maybe everything's calming down, and then we just shat the bed.
Yeah. Um,
Um, a lot of things going on that are kind of making that happen. Of course, the biggest one would be the tariffs that China imposed onto the U.S. I don't know exactly what items or industries they are taxing, but it's over 128 different tariffs. We only hit them with the aluminum and the steel. They hit us with the 128, and fears of a trade war are brewing. I don't think that it is going to happen. I want to jump into a little bit into that deeper, but for now, it's been a rough week. Uh, Everything just got absolutely crushed.
how did you
Most
do?
notably, oh man, I lost 9% this week, and I had my worst trading week in history of my trading record. But you know what, Nathan? I love it.
I was down
I'm
7%.
buying the dip. So you're about the same, 7%. I'm buying the dip, Nathan. I see nothing but opportunity here. We've been waiting for moments like this. For the past 2 years, we've had a time where if you want to make money, you have to jump in because you're going to miss the train. So for the past 2 years, we've literally watched everything just go up and up, and we don't know where there's value. We don't know what to buy, when to buy, and the only way to make money was to just go in, and things were going up. And now we're at the end of that train. We're starting to see value come up a little bit during this correction. And I'm like I said, I'm seeing a lot of opportunity. What
Yeah.
about you, Nate? Is it going to keep going? Are you scared?
Well, I think I call it the stock market crash of 2018. It's basically what it is because in 2017 we just had like straight gains.
Oh,
It plowed through.
2017 is beautiful.
Yeah.
2017. We won't see that for a while.
Yeah, I think that was a big thing for Donald Trump to do was kind of, get this S&P up 20%, which is unbelievable.
Hmm.
Um, Side note about Dow Jones, this is about its fourth week down, so it's trading about a month down um, right
Mm.
now. So, yeah,
Some value.
it's definitely
I'm personally seeing some. I'm actually gonna save this one for later. But coming back to everything being down. Trump signed a budget, and I'm not the omnibus bill, whatever it's called. You being the politician major that or what are you? What was it?
political
Political science.
scientist. Yeah,
There we go. Political science major we are. You probably are a little more in tune to that. Only thing I know is I remember hearing Trump saying, "There's a lot of things I'm unhappy about. I'm unhappy about a lot of things. Signing this, a lot of unhappiness." Um, yeah, it passed the budgets to avoid the government shutdown. Trump apparently wasn't too unhappy because didn't veto it. Went ahead and signed the motherfucker. And did you happen to see? Did you happen to see much on that?
so it was 2000. It was some 2100 pages long, 2200 pages long. Um,
Hmm.
notably, we can compare this in history when Reagan brought down a similar spending bill down to the floor. I think during his State of the Union, and he showed people. He pulled up a stack. He's like, "This is it. You can't be giving this to us 3 days before it's due for a vote, and vote it." And then the idea behind like voting yes for this and why it really got approved was is fiscal conservatism. I think that's what it's called. Was basically voting by your party, and this being the budget bill, so it being fiscally responsible for them to vote that way is why it got voted in.
Hmm. So
So
it kind of aired on the Republican favor.
yeah,
Yeah, makes sense.
yeah.
Always does.
I think Republicans gonna have a rough time come November, and might shake the market up if Democrats get in.
Hmm. Hmm. Another quick thing I want to jump into before we actually kind of maybe two things I want to jump into before we get on today's topic, which is going to be liquidity and volume. Definitely a very important thing. But one thing, Facebook kind of led the market drop. With and the reason that that one stock can pull that down is because her size is so big. The company is. I'd have to get the exact number, but I know it's a very big company. It's almost $500 billion in market capitalization. And when there's a large sell off like that, that one stock will pull down all the indexes with it. We've seen that with Boeing, we've seen that with Facebook and Netflix over the past couple of years. So Facebook leading that drop with their turmoil. What's your thoughts on Facebook, Nathan?
I mean,
I have my.
I like the management of Facebook, and that's really weird to say, but I like the innovations that they do. By the
Mhm.
way, you're right. It's a $463 billion
Yeah, it's
market cap
huge.
company. It's massive. Um, but I mean, like everybody uses Facebook. The like ad revenue is definitely in their favor at
Hmm.
Facebook. That's how they make money. But I feel like I'm long Facebook, but I'm short in the short term. You know what I mean? So I would definitely short the stock in the next like probably this year. If I was gonna short the stock, I would definitely do it now. But if
You
I'm
think it's going to go through another rough patch?
more than it is now, yeah. I think it's at 159 right now. See if I can
Hmm.
put a number on it.
Well, she took about a 10% drop, and that's a good drop. It's not a plummet. It's not a massive dip or anything, but 10%, especially on Facebook, is very good. And it can be almost tantalizing, but I feel like Facebook is still a lot of hype.
Really? You think
There's
so?
a absolutely. I think that there's
No.
too much hype behind the innovation of Facebook, and eventually that hype is going to die out. But the other thing that I'm liking about this drop, and I'm seeing a potential opportunity, is that this sell-off is all news based. The fundamentals of the company are not changing. Their earnings are not changing. They're getting the same cash flows. They're getting the same margins. All that stuff. The stock is just being sold off. So the 10% drop and the amount of time that it took to get there is really substantially
Important.
uneasy.
Yeah.
I guess is a way to say it.
I'd buy it in
And then
140s. That's where I would buy it. 135,
the 140
140.
is this. That's where you can get excited. What is she sitting at right now?
159.
159.
160, yeah.
Yeah, so big drop there. Still going through a little turmoil. They had that data breach, and there's the issue of safety and security with it and stuff.
Yeah, and
So
then they're going through
I
like
think with that entire decline, I'm seeing a lot of potential opportunity in the Nasdaq specifically, more so than your Dow and your S&P. Um, the Nasdaq, acts a little bit more different than both of those indexes because they're tech and healthcare based. They have a little bit more volatility, but I think the Nasdaq has pulled down enough that it's time to start giving it an eye. I definitely prefer the Dow, and then after that, I prefer the S&P. I don't really pay too much attention to the Nasdaq, but with this drop, I'm
it
kind
might
of
be
liking
time
the
to get in.
opportunity there.
It might be
It
time to
might be
get in.
time to hop in. Ticker symbol QQQ. That is. That's the Nasdaq 100 composite. If you're interested in either looking it up or maybe even investing in it, That's QQQ. The Nasdaq.
I don't
The
like
Nasdaq.
Nasdaq.
It's it's just weird, you know. It's just
I
you don't
think
know. I don't.
I
I
think
feel like
tech
you don't know what
stocks.
to expect
I
with it.
feel like yeah, because I feel like tech stocks are coming to be overhyped.
Hmm.
Um,
Hmm.
I don't know.
You know, last year growth just took off. Anything that was electronic or web based just skyrocketed. You know, 25. There were some stocks up 50, 60. What did Nvidia do? Like 140% last year.
They lead the
Semiconductor.
yeah they lead the semiconductors on the market.
Completely, it's insane, and a lot of it, I hate to say it, a lot of it is hype because a lot of these companies have huge debt. They don't have much, you know, they don't have a lot of assets. They have people with ideas and computers. They
That's
don't have a lot of like real estate. They don't have property, factories, and workers.
that's basically what the .com bubble was. Was everybody was
Mm-hmm.
investing in these websites, these .com websites, and they weren't really doing anything except for being websites. They didn't have a revenue. And
Mm-hmm.
then you look in 2000, there's a .com bubble, and it crashed. And a lot of people worried. You ever see your computer that says Y2K proof? It was around that time that the .com companies were coming around, and there was one company that survived all that. You know who it was?
And who was it?
Amazon.
Amazon. I mean, there were a few others, but I mean, those ones were more established, like Microsoft, Apple. They were already fairly established
They
at
all
that
took a hit.
point.
Even Amazon took a hit.
Oh yeah, back when she was trading in like the $40-$50
Oh, it
range,
was
and
like
that was
$30,
ridiculous.
man. Pick me up a share for $30. Jesus.
No man, you know if we could go back in time, you know hindsight investing is easy.
Yeah.
You know I'm a good in trader in hindsight. Oh, if I bought here and sold here, I would have this. You know,
Yeah.
but when you know when
Ideally.
you're actually going through it and the money's on the line and you're in that moment, it's not that easy. You know, we've all
Yeah.
been there. You know, we've had those specific examples where I'm like, let's do it. As soon as the market opens, I'm doing it. And then you watch it, you're like, I don't know, man, I don't know. Time to pull that trigger. You start to back up. I don't know.
Yeah.
But Amazon, Apple, of course, you know, worked out very well. You know, our parents didn't really. Whatever. I'm not going to get into that. That's a different. That's a different topic. So, yeah, that was your week. Did I really miss anything? You know, that
Yeah.
was the big it.
Yeah.
Tariffs and Facebook kind
Yeah.
of seemed to be the
Bitcoin cryptocurrencies are unchanged from the week when we're still updating you. They're really unchanged.
yeah. Bitcoin has just been she's just been such a lull.
Yeah, buy it if you want. Don't put your whole life savings. That's my advice.
I just we don't know what to expect. So you're buying a lottery ticket. I'm in there. I have my lottery tickets in there. I don't have much, but I got a piece of that action
Yep.
just in case. You
Yep.
never know. I don't want to be looking back in my 60s and 70s and say to my grandchildren that I could have invested in Bitcoin 50 years ago and I didn't.
God damn it.
I'd rather just put the $100, $200 in there and just see where it goes. It's
Yeah.
okay. We'll see.
All
All right,
right.
Nathan. Today,
Let's do this.
let's jump into it
Let's
today.
get it.
Volume and liquidity.
Fun stuff.
Can you give me a brief definition as to what? Start with volume, because that we hear liquid and liquid assets and liquidity. It's one of those nasty financial terms, but go ahead and start with volume. Can you tell me what volume specifically on a stock is?
Sure. So I'm on Investopedia right now, and it's literally volume. It says volume is the number of shares or contracts traded in a security or in an entire market given in during a given period of time. So basically, it's how many shares go through, given sold or given bought. It's how many
Hmm.
shares go through. For example, like Facebook, I think they were having 14, an average of 14 million shares a day. So that's
Exchanging hands.
yeah, that's exchanges a day. Yeah, so that's a lot. That's a lot of volume. You'll see like kind
Hmm.
of weaker stocks or penny stocks or a lot of ETFs I've seen that don't have a lot of volume,
Hmm.
and they don't move as much.
Hmm. Yeah, volume is one of those. I'm gonna coin the term insta-metrics. It's one of those immediate things that you want to look at because the volume is going to describe the amount of interest that's behind a stock, whether you're buying it or you're selling it. The volume is going to tell you if there's any of that. if there's no volume, no one has the interest in buying it or selling it, stay away from it.
Yep.
But at the same time, you want to ignore everything that's got the hype, that's just constantly trading hands, just ba 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 ba. Your Facebook, Amazon, Apple, Ford. You don't want to just jump into it just because it's got good volume. You want to make sure that the volume is meaning something.
Right.
Volume is also going to determine your ease of getting in and out of that stock. If there's a good amount of interest and there's a good amount of volume, you'll have no problem selling your shares. But when the market takes a dip and you want to get out, you're going to have a hard time getting out of that position because of that volume. If there's, remember, there's always a buyer and a seller behind every order. You know, I think a lot of people who play this game, that's right, it's a game. A lot of people who play this game often forget that there's buyers and sellers. You're not just magically getting this money left and right. Someone is handing you money for your property. You know, that's what this is. It's a market, it's an auction.
It's an exchange.
So, it's an exchange.
You do it on the
So
exchange.
liquidity is basically the ability to get out of a position. Liquid stocks are a very liquid asset. Houses, not so much. Something that you can move out easily. You know, there's lots of buyers. That's a liquid asset.
Right.
I guess houses can fall in that category, but you know what I'm saying.
No, no, they don't fall in that category.
14,
You can't really
14,
sell
15
a
million
house
houses
and
don't
then
get traded between 9:30 and 4.
yeah, you no houses are illiquid, are considered illiquid
Okay.
for sure.
So with the illiquidity though, there's larger, higher price swings. So, for example, we talked. If you go back to the first episode, Nate, I told you about how I invested. I don't think I said the name, but it's EVAR. The ticker symbol is EVAR. I don't even think it trades anymore. It was the first stock I ever bought just because I had Googled stocks under $5, and I just wanted to see how it all worked.
Cheap
So
stocks.
cheap, yeah, shit. So I mean, I guess it's a good lesson. I learned something from it. But what I personally had did, I when I did that, I bought the shares and I did a market order. Just get me the shares right now, and I got them for $1.08. Well, 20 minutes later, that price went up to $1.10. Oh my God, big move! I had all 5 shares. I just made 10 cents, Nathan.
Flipping cash.
Oh my God, I just made 10 cents and I didn't even have to do anything. So just to, see how it worked and play the game, I went to the market, I sold, and I sold it for $1.04. Now, right? So I lost money. And I was just like, no, no, no. The price just said $1.10. Why am I selling at $1.04? Come to find out, that was my first lesson in liquidity. The stock of EVAR traded on average 1,000 shares a day. So if you looked at the chart, there was just like straight flat lines, and then it would move up or down, and then it'd go straight flat, and then it'd go up or down again. It'd just make these weird, ugly, flat patterns, plateaus.
Yeah.
And the reason that was is because there's literally nobody buying or selling them. So the price was just sitting there at $1.08. Well, someone had bought for $1.10, and it triggered the price to say $1.10. The next order was at $1.04. The next bid was at $1.04. So because of that lack of volume and that lack of interest between the buyers and sellers, there was a higher price swing between like $1.04 and $1.15. They have to meet somewhere in the middle and agree upon a term or agree upon terms as to how they're going to sell that stock.
Hmm.
Does that make sense?
It does. It does. It definitely makes sense.
So if there's tons of interest, pennies don't matter. When it says $200 for this stock, it's going to be $200 if the volume's good when you go to the market. But if there's no volume, those bid and ask spreads they're going to be so far apart that you don't know what you're going to get. If it's between $1 and $1.50, you might get $1.20, you might get $1.40. You don't know.
Yeah, and
But those larger price swings, you don't want to be subject to those.
your like one share isn't gonna dictate the next share price. Isn't
The
gonna
next
dictate. Yeah. It's not going to
Exactly.
dictate what the price of the stock will be next.
Exactly.
It's just
So to give you a more recent example, personally, there's an ETF that I love. It's SPYB. And I was just telling you about it. I was texting you about it last week. SPYB, it's a S&P 500 buyback ETF. We'll get into buybacks another time, but really all it is a company decides to use excess money to buy some of its shares back, and that in turn drives up the stock price because it gets rid of floating orders out there, it gets rid of sellers. So this SPYB, it has pretty decent performance, up about 20% the last year or so. It's got some big blue chip companies in it. There's a lot of finance and technology stocks within the fund, and I kind of like the idea of it. It's a lot of buybacks. Buybacks can really push a stock price up. Granted, it's a little artificial, but uh, money's money. So when a stock goes up, I'm a fan of that. Well, this SPYB ETF, for whatever reason, I personally don't know why. I just know that it does. It doesn't have any volume. It trades on average like 12 to 1500 shares a day. It's
1.91
average
thousand.
volume. Yeah, it's tiny. That is not volume.
No.
1,000 shares between millions upon millions of market buyers. That's not a lot. So when I entered this stock, I didn't realize how much volume there was and why it was so low. Like I said, I don't know why. I just know that it's something that I got to be wary of. And she swings, her price movements are like at least 40 to 70 cents. She's about a $65 stock. Her price moves are 40 to 70 cents rather than just pennies on the dollar.
Yeah, they're like big plateaus. I'm looking at the chart
Hmm.
now.
If you look at the chart, there's large gaps up and there's large gaps down just throughout the day. And it's a weird stock. It has no volume, but you want things that have good volume because it's gonna have that Wall Street institution footprint on them. If Wall Street institutions are interested, they're gonna push that price up because they're gonna have to buy a shitload of it. Well, if they don't care and they don't have to buy it and they don't want to buy a shitload of it, who's gonna buy it? All the money is sitting in Wall Street. It's sitting on those institutions and those banks. It's not you and me or the million of other retail investors that are out there. We're not pushing the price around. It's them, and we're just here for the ride.
Ride the tides, baby.
Ride the tide. So you got to watch volume. I personally, a lot of people say you want an average volume of over a million shares a day. I
A
think that's
million shares a
ridiculous.
day? That's so
That's
many.
what I've heard in some of those like intro books. That's ridiculous. Personally, I just want it over 50,000.
I want a hundred
That's
thousand and
that's
above.
mine. Yeah, 100,000 is good. I personally think 50,000 is good as long as you're using limit orders to buy and sell. Liquidity, or I'm sorry, volume. Um, I forgot where I was going with that. As long as you're using your limit orders, that those price swings shouldn't affect your portfolio too much between when you're buying and selling. But if you're market ordering, we'll get into that. We'll get into all this if you don't understand it.
Yeah, we'll hit it at some
But
time.
if you're using your limits in there, what's that?
I said we'll hit it at some time.
We'll hit it sometime.
Yeah.
But as long as you're using those limit orders, you'll be fine. As long as there's a decent amount of volume, there's a decent amount of interest, and that people want the underlying asset, they want that stock, they want that fund, they want those bonds. As long as there is interest and there's hype behind it, not necessarily hype, interest, people will go for it. So watch your volume, watch your liquidity. It is one of those little insta-metrics that are right there every time you pull up a stock, no matter what broker or what chart or what platform you use. The average volume and the volume will be there, and that's always expressed in shares, like how many shares are traded.
Here's how I use when I'm analyzing a stock. I also look at volume. What I'll do is I will probably pull up a year chart, and then I'll pull up I'll probably tab up a volume chart underneath it, and it shows a bar graph underneath. It shows bar graphs of each day, corresponding to what how the stock performed that day. And if I
Mm-hmm.
see like most charts will show reds when the sellers are in control, right, and greens when the buyers are in control that day. Um, but regardless, it shows how much volume total was that day underneath the stock. And what I like to look for is growing volume. So if I see like a year, it's trading at maybe $50,000 consistently, and then it goes up to maybe 75 throughout the year, and then 100,000. That's like showing a lot of interest. I mean,
Hmm.
that looks good on a stock.
It's a
More
growing
people,
interest.
yeah, more people getting
Same with
involved and interested in it is gonna drive that stock.
exactly. Think of it as like a business. As if a burger joint is starting to get more and more customers, and their volume of customers is increasing every single day, and every single month, and every single year. Eventually, that company is going to be more profitable. And it's the
Right.
same thing. If there's more buyers entering that stock, they're going to have to push that price up. So open interest and volume is definitely something you want to pay attention to. Pay attention when you're buying a stock, pay attention to the sector. There's a lot of sectors that have a lot more volume than others, you know. Um, but yeah, that's volume and liquidity. That's just a brief touching point on it. Like I said, that is one of the insta-metrics. As soon as you pull up, any stock or fund on a chart, that's going to be one of the first things it tells you is volume or average volume per day. And it's definitely something you want to pay attention to. Don't just go in there thinking that, oh, this is the next one and nobody fucking wants it.
Yeah.
So
Yeah,
yeah,
it's one of my
that's my
key
spiel.
it's one of my key points in my fundamental analysis is volume.
Oh
If
yeah,
it
absolutely. And
if I can't assure myself that the price is actually going to move, then I'm not going. It's too risky for me.
mhm. And that's just one of the few metrics that you want to look at for the bigger picture. But I'd say that's one of the more important ones
Yeah,
for sure. Absolutely. It's the reason it's always shown when you pull up a chart or a stock. It's always shown that volume. It's a very important metric, and just keep an eye out on it. So moving forward, looks like we're starting to kind of push back on time.
yeah.
Um, we also, what was our other topic we wanted to get into
We were
today?
gonna hit some volatility, but
Volatility. Yeah,
yeah,
we'll cover that on Tuesday's episode. Right now, like I said, it's Sunday. We tried to get this out on Friday, but life happens.
yeah. We'll do
Um,
volatility and price movement Tuesday. That sounds really good.
that sounds like fun. And then I'm thinking Friday is going to have to be a dividend episode.
Okay.
That's We'll have some fun with that.
Yeah. All right. Well, yeah, we
It
got
may be that may be a long episode because we can just talk about dividends
a
all the live long
a
day.
two-parter.
Yes. So Nathan, time is coming up. What are you watching this week?
I wasn't really prepared to really watch. Actually, you know what? I'm gonna be watching J.C. Penney. Just got into options.
J.C. Penney.
We just got into options this week, and I'm looking to short J.C. Penney right around mid-April, end of April, maybe midsummer. I just don't. I think J.C. Penney's done for. You know.
And what is shorting?
So shorting. Well, you borrow your shares and instantly sell them, hoping the price is going to go down, and then you'll buy them back at a predetermined price. That's
Hmm.
hopefully. I mean, you want it to be above the price that it currently is, so you get like a discount.
So you're
You
betting
keep that
against
profit.
J.C. Penney is what you're saying.
Exactly. Shorting is betting against. Yeah, I
So
brought that
you
up
want
on
it to go
CJ's
down.
podcast, and I realized that I said a lot of terms that not a lot of people would really understand. I had to break it down. Shorting is betting
Makes you
against.
kind of sound smart though, doesn't it?
I feel like I don't know a
Makes you feel.
lot, but like I know like enough terms to make me sound really smart.
Yeah, when you talk to the uneducated investor, you can sound like you're some sort of guru when you're really not. We're not. We're not.
And you listening are not an educated investor. That's
Yeah, we're not.
maybe why you're here
Everyone
is to get
starts.
educated.
Yeah, everyone. I had to get educated.
Yeah,
I traded stocks before I knew what a dividend was.
poor guy.
I traded stocks before I knew what volume was, PE ratios. We did all of that. Times were different.
Who are you watching?
Um, I, I was gonna say one, but now I gotta say two.
Okay.
Uh, I'm gonna start with financials. Financials got absolutely devastated right next to technology this week. Those were the two biggest factors pulling down the market.
Interesting.
Financials are your banks, obviously. your banks and anyone that does or any sort of business that's involved in money. Um, XLF is my favorite way to play financials. That's X-Ray Lima Foxtrot. It's the financial select sector, and just Friday alone, she dipped 3%.
It's actually
But she's
really
just had a
that's
horrible.
really surprising given that the Fed just raised their rates and plan on doing more.
Yeah, she's down 7% just for the week. Moving from about the $29 range to the high 26 range. So only a $2 drop, but still the $2 drop on a $28 stock is almost 10%. So I'm watching XLF. The banks got crushed, but rates are going up, so they're gonna that money is coming in. The cash flows will increase, but for the time being, their expenses have also increased. So watch out for the banks. They got devastated. Watch the pop though. They may come back eventually. When shit like this gets just so wrecked and so hammered, eventually people are going to start to find opportunity.
The
And you want to be
sideliners.
there. You want to be there before them. A stock can absolutely go to zero without anybody wanting it. Absolutely. But an XLF, every single bank in the United States is not going to zero. That's probably the dumbest thing I've ever heard in my life.
Yeah, they'll just bail them out
So,
if they try.
exactly. Yeah, we've seen that. So, as
Unbelievable.
that stock continues to drop, eventually it's going to put in what we call a floor or a bottom. And that's because people are starting to, buy into it. The sellers have got down to such a good price and buyers it's attracting buyers. Just like cars, if the car you want is just too expensive and it just keeps going and you can't afford it. Eventually, when they come out with the next model, that new one is going to come down. So because you've been patient and you've been waiting, eventually you go in and you can buy it cheaper because everyone else is going on to the next best thing. So people will start to find value in other places.
So what's the other one?
Uh,
What's the other stock?
the other one was Berkshire Hathaway.
That's cheating,
Uh,
man.
it is cheating because it's just like playing an index fund. Fuck, you might as well be playing S&P. But she is a private company. She is a little less diverse than the S&P 500, and she's
And
primarily financially focused.
who is the top holding of XLF?
Top holding of XLF is Berkshire Hathaway B shares.
Yeah.
She she's pulled back pretty well, and she's under $200 now. I'm gonna pull up the chart just real quick so I can get you the exact numbers. But
For those who
I can
don't
pull up any
know,
stock and tell you
Berkshire Hathaway
it's worth.
does real estate investments. They also own Geico Insurance, so that's what they do.
Among literally like hundreds of other amounts of companies. Like they own 10% of Coca-Cola alone. They have like 48 million shares of Coca-Cola.
Yeah, that's Warren
They
Buffett's
own
company.
10% of the company, and they collect millions in dividends every 3 months just from that one holding that they have. Berkshire Hathaway, people don't know who they are. They never heard of them, but it is one of the biggest, if not, I wouldn't say the biggest, but it is one of the biggest companies in the world. And they just make their money by owning a bunch of other companies. They just buy a little bit of a bunch of different ones, and
That's
they make
Warren.
a shitload of money doing it.
That's Warren Buffing,
Warren,
head in the wheel there.
yeah. She's down to 192. Her high, she got
Expensive.
all the way up to 217 in February. So she's pulled back almost what $25, and on that's about a 10% decline alone, 11.41% decline from her high. So I'm starting to pay attention to her. She always goes up. There's one thing I don't like about her is that she doesn't pay a dividend and she gets all that cash flow. So I don't know why, but
You know
some
why it doesn't pay a dividend.
because Buffett says that I can do better than if you were to pay dividends. I can do better with that money. Shut up. Just give us the money. We want, whatever. I'm not going to get into it, but I could do a whole episode on
A Berkshire cast.
Berkshire Cast. So that's about all I've got. There is one last thing I want to get to. Earlier you were talking about Investopedia. You were looking up the
Yeah,
definition of volume.
yeah.
Give me a quick Investopedia plug because just like Robinhood, we love Investopedia. I learned
Oh,
so much through Investopedia.
dude,
So
Investopedia.
let's plug them because we love them.
So it's investopedia.com. It's just like Wikipedia, but for any and all things investing. Literally every if you think about a term and you don't understand it, what we're saying, Google it, and then type in Investopedia afterwards, and it'll come
Hmm.
up with a web page. Maybe it's an article, and it'll definitely have a every. It seems like every single entry has a video next to it.
Hmm.
And I'm so surprised because it's like the same, like it's either this girl or this guy, like talking
Hmm.
about it. But there's always a video, and it's always informational. They break it down super easy for you. I love it. I use it if I don't know what a word means. If I ever hear a podcast or read something and they're not explaining it well, I'll definitely go to Investopedia, and that's definitely where a lot of my education comes from.
That's definitely where a lot of my knowledge came from. And there's a lot of things that you like, oh, I don't know this term. I don't know exactly what this means. So you can go to Investopedia and they have those little helpful videos that just
So
show you. And they're
helpful.
quick. They're not like sit down and listen 30 minutes about operating cash flow.
And they have
They're these
pictures.
quick 2, maybe 3 minutes videos that show examples and diagrams of how everything works. And like it's
Hmm.
some of them I've watched 1 or 2 times. That was how I understood the concept of short selling was by watching some of those Investopedia videos.
Yeah.
So very good. That just like Wikipedia, it's an Investopedia, great site. One other thing that they have that's great is they have a stock
I was
simulator.
just
So if
about to
you're
say
listening
that.
to this and you're excited about investing and you're just not quite ready or you don't even have the money to put away into investing, fear not. Go to Investopedia, sign up for their stock simulator, and that can get you kind of into it to kind of see how everything works and stuff. Don't rely on it. It's not that accurate, but it will show you the ins and outs of buying and selling, and it'll show you how, if you've profited, if you've lost money. It'll show you all your statistics as if it was real money. But like I said, there's differences between trading fake money and trading real money.
Yeah.
Your emotions aren't there with fake money. Your emotions are there when it's your money.
Buy it all.
Buy it all, baby. Short it all. Short everything. Short everything. All right. So, I mean, I had fun.
Yeah,
I
it
feel like
was a good podcast.
this was a nice little quick hit
Yeah,
episode.
yeah.
Uh, I feel like I definitely dominated the episode, so
That's
we're gonna
okay.
give you a shot on the next one.
Yeah, that's okay. We'll bounce
But
off each other.
yeah, we'll bounce off. That's what we're here for. We're a good team.
Yeah,
So,
yeah.
I'm watching Berkshire slash XLF. Nathan is watching.
JC
What was that
Penney,
again? Jason.
JCP.
What you got a price target on that bitch, or is she just going under?
Let me look real quick. Let me kind of gamble real quick, real quick.
Mm.
Hold on, it didn't come up. I think it's a $1.50 calls is what I think I'm gonna look at.
Are you buying them or selling them?
No, I mean puts. Sorry.
Puts, $1.50
Yeah, I'm
puts.
buying $1.50 puts.
Ooh, and what is she at now?
$2.92. It's got a break in half.
Ooh, can I one last question? Can I ask your time frame on that?
It'll
How
probably
fast it should?
it'll probably be like 6 months.
6 months. Wow. What's the premium?
Oh, it was pretty cheap last time I checked. Let me. How do I get there?
I can't wait till we have our options episodes.
Here we go. Here's a canceled put. Oh, I'm buying 250 puts. That's what they are.
250 puts.
They
I like
were
that better than 150 puts in
yeah they
6 months.
they were they were trading 4 cents premiums, so that was nice.
Yeah,
It's
why
cheap.
not? That's those are your lottery tickets,
Mhm.
and I like your odds on those ones.
Yeah, me too. The
So
problem is the exact problem that we talked about today was there was no volume. There's no
no volume.
volume for those far out shorts, so it didn't hit.
If you keep that bid there, and if you're correct and you keep that bid there, it's gonna hit. Someone will
Yeah.
have that interest. Someone will find that value.
Yeah, well, that's about it, isn't it?
That's it. We did a podcast. Sorry it's late. we tried. Like I said, real life happens. We're busy people. This was fun. This is a beautiful episode. I hope you learned something about volume, and it's one of those little insta-metrics when you look up stocks. You say, "Hey, I know what that means. I know what volume is. I don't know what everything else means, but I know what volume is." Uh, yeah. So thanks for listening, guys. This was fun. We're gonna hit you again on Tuesday.
Yep. Thank you guys for joining us. We will be here on Tuesday. We'll get it out on time this time. And if there's nothing else, is it Monday yet?